Welcome to the WuBlockchain podcast. For the latest insights into blockchain and crypto, make sure to subscribe to WuBlockchain on YouTube and follow us on Twitter. Stay informed and join the conversation. Today, we are excited to have Chris Yin, the founder and CEO of Plume Network, join us. Chris, welcome. Please introduce yourself and Plume.
Thanks for having me. I'm Chris, the one of the co-founders and CEO of Plume. We built a blockchain and a network and an ecosystem focused on RWAs, specifically to bring forward a new vision for RWAs that we call RWAfi. And very quickly, just on the background, we've been doing this for a little bit over a year now. There are three co-founders. We started this project together, and before this, I was a founder. Have ended up sold my first company, second company we took public, and the third company we raised $50 million and continues to exist today. And then I've known our co-founders for a little bit, and we were kind of playing around with a couple different ideas, and we had gotten very excited by the potential for RWAs, and specifically around doing something different in RWAs, focusing on RWAfi, and making sure that these RWAs are useful for real for crypto people and bringing real yields and real use cases on chain today. So we have over 180 projects building on Plume today. We've got over $1 billion worth of assets deploying on Plume, several $100 million committed to coming on chain as well. And then, of course, we recently concluded our 2-month testnet campaign where we had a little bit over 3.75 million active wallets doing over 270 million transactions on chain for the first 2 months of our testnet. So long story short, it's been great, and we've got a lot more things to come. So excited to share more and tell you guys about what we're doing on Plume today.
Is there any notable partnerships Plume has formed now?
Yeah, we've done many different partnerships. We think of Plume as an open and a neutral ecosystem, and so we'd like to work with many different players here. A few different areas. We work very closely with the Arbitrum team on enabling and running and working on our chain and our ecosystem. So we are an EVM chain. So we work very closely with Arbitrum on that. Number two is we work very closely with Celestia on DA, right? So our data availability layer is used through Celestia to fees and transactions low and to keep the user experience great. And then, of course, many other partnerships with different RWA protocols as well, including protocols like Centrifuge is one of our investors is one of the founders of Centrifuge. We've got folks like RWA.xyz as well. So many different partnerships from all kinds of protocols working with us today, both RWA projects, but also infrastructure projects as well. And so a bunch there.
And can you explain what RWAfi, real world asset finance, is and how it integrates with DeFi principles?
Yeah, of course. And so maybe zooming out for 1 second, RWAs historically have been, in our view, very boring and very static, and not the things that we would normally use. Our team comes from places like, my co-founder Teddy comes from Coinbase, and he was at BNB Chain. Eugene comes from, Robinhood Crypto, DYDX. I've come from being a founder and a VC for many years. And so for us, we came to this market from the lens of people that use crypto and are in crypto and crypto native folks, versus a lot of the existing RWA projects, which really come from more TradFi principles, right? And so when we come to this, we see two things. One is that the truth is, for most RWA projects in the past, right, this market has come a few times before, the existing RWA projects did not have a lot of volume or attention. Right. And that was the problem with those things. And so we changed that and focused by one big thing, because those products were focused and being built for a TradFi audience, right? There are TradFi people coming to TradFi and building products for this TradFi audience. The difference is, and the problem is, the on-chain audience is mostly crypto natives. So the products they want and the user experiences they want are very different than what TradFi products offer today. And so we came from this view of, if we can basically build this market and bring in what people want, right, which is real yields, right, real use cases, and bring these ecosystems in, then it matters a lot, and we can really make sure that this is a useful thing. And so we wanted to architect the product and architect this business in a way that made it very useful for crypto native people. And that's what we call RWAfi, which means that what are the key principles of crypto today, right? One is everything is liquid, things are composable, things are permissionless, and you can utilize the principles of DeFi, which is you own your own assets, you can move them around wherever you want, right? And you can utilize them as collateral in different ecosystems, right? You can hypothecate, you can loop, you can do all kinds of DeFi strategies on these assets because they're open and programmable, right, by nature. We are taking that same approach and same principle to RWA assets, which is called RWAfi, which means you should be able to very simply, instead of having to do the classic RWA process, which is go through some KYC and then enter into a pool, lock your money up for 3 years to get a very low yield at the end of the day, right? And also potentially get rugged, right? We are changing that, where you should be able to utilize RWAs the same way you use crypto native assets, which is you can very simply come into the ecosystem, swap to hold a token that represents something, and then buy that asset and then begin to earn yield against it, right? And very safe, stable yields with high APYs, right? 5, 10, 15, 20% is very doable. And then not only while you're earning that on a very regular basis, right? One, it's liquid. If you want to sell and swap at any time, you can, right? And it's also permissionless, right? You don't have to enter anything. So that's the first principle. Number two then is to make this asset composable across the DeFi ecosystem, meaning if I want to swap this for something else, I go to a DEX and I swap. If I want to use it as collateral, take out a loan, right? I can. And then while I'm earning, I can still go do other things around crypto. If I want to then use this also and enter into a perps DEX, right? And maybe speculate on something else and use this as a position, right? In order to take out leverage or something, I can do that as well. So that's the idea for RWAfi. It's not to only bring RWAs on chain, it's to begin to bring both of these worlds together and follow what users today are already doing. Users today are already using crypto and RWAs together simultaneously, right? The number one RWA project in the world, right, that no one thinks about is the stablecoin. Right. And so the stablecoin is already here. People use it all the time for everything. Right. And so people already seamlessly use RWAs and crypto in the same use case. Right. But the problem is most RWAs, they do not understand, right, how to formulate their products and make the user experience more like the stablecoin today, right, and focused on crypto natives. And when you do that, it unlocks a tremendous amount of growth and potential. And so that's what we're focused on with RWAs, to bring real products to people that are focused on real yields, right? And then you can use that in between, so you can both earn stable real yields and also get token exposure at the same time. So you can do whatever you want, right? So when the markets are going up and you want to go into alts or more speculative assets, you can. If things are going bad, you want to go into more yield-bearing assets or real, you can also do that. If you want to also, when the markets go up, use your yield-bearing assets and use as collateral to go into speculative stuff, you can also do that, right? But we really want to unlock the innovation around mixing these two things together, right? And follow what users today already do, which is want to be able to take both things and use them together. Does that make sense?
Yes. So what unique opportunities does RWAfi present that traditional DeFi platforms do not offer?
Yeah, the number one thing is two different things, really, right? Number one is going to be real yield, right? DeFi products today are really focused on what we call like endogenous yield, right? Really where you're focused on in a closed loop ecosystem to earn and pass yields to people, right? And so this is why you end up having yields that really change day to day, right? They go up and down depending on the system at the moment, and also the yields can the sort of tokens that get emitted, the products and the yields for those can also go up and down. The value can change a lot. So sure, you may think it's a 20% APY, but it actually isn't. When you fast forward a year, the 20% was a single moment in time, right? And even the value of those tokens may have gone down or gone up a lot. So that's what the DeFi yields are, right? And it's not to say it's bad, but it's just different, right? RWA yields, what they can do is we can tap into real yields coming from an off-chain ecosystem to onboard and on-ramp that money into the ecosystem, so the user is earning things like USDC, USDT, USDE, or they're earning real stables, right? At a meaningful APY, right? Nobody cares if it's 2-3%. You need to have real APYs to make this competitive. But when you can bring RWAfi into the ecosystem, then you can still participate in DeFi, but also get the benefits of having real yields coming on chain, right? And that's the benefit of having this. And so that's one what we're kind of doing. And number two, because we are then bringing in these real assets and real capital and and real cash flows and yields from off-chain world, we're growing the entire crypto ecosystem every single day because we keep bringing new dollars in, right? And the third piece is actually when you have new dollars coming in and also more relatable assets to a normal audience, we can increase the user base, right? And increase the types of people. Again, we saw this with the stablecoin. The first stablecoin product and use case was focused on DeFi, which is really making it easier to trade, right? And allowing DeFi participants another asset to swap against, right? Or to hold, right? So you don't have such volatile pairs, right? And then the second use case was, okay, now people around the world can hold the US dollar, right? As a result. And now the third use case is institutions can come in, right? Because they understand the benefit of stablecoins and they can begin to build cross-border payments. They can do all kinds of their products. They can settle faster, all those things. And so with RWAfi, we're doing the exact same thing. We're starting off with DeFi and crypto native principles, right? Then secondarily, as we grow the ecosystem and we bring more yield in, right, more people who are familiar with these products and want access to these products will come in as well. And that will lead to the third piece, which is more institutions as well. So we're really following the same path and making sure this is useful by not only for the DeFi audience and crypto audience today, but then also the second step is to really grow the entire ecosystem with real users and more yield.
So as DeFi and RWAfi continue to grow, what role do you see traditional financial institutions play in the next phase of Plume's development?
Yeah, I think it's two things. We've been very lucky to see the rise and the growth of institutions in this cycle, right? Because of things like the BTC ETF, right? Or the ETH ETF, and also folks like BlackRock and Larry Fink coming in and deploying a lot of money on chain, right? And beginning to really tokenize a bunch of their products and bring this on chain, right? You see a lot of excitement across the institutions finally coming to actually build products here. You have Franklin Templeton with their Benji product, BlackRock has Biddle, right? Wisdom Tree is coming in, you have Van Eck doing products. And so these big institutions are really beginning to come on chain as well. Now, it's going to take time though, right? Everyone thinks that just because, BlackRock or Larry Fink gets on stage and says tokenization a bunch of times, right? And they tokenize a bunch of products on ETH, that it's all going to happen tomorrow. It's not. It's going to take time, right? And so our perspective and our view is very simple, is we want to show the institutions, and we're in very regular contact, we talk to all of them all the time, right? How to use crypto and how to think about crypto in a way that benefits them, right? And also benefits us and allows them to build products that are useful for an on-chain environment, right? And not to copy the exact same things we used to do and put it on-chain, right? And so by bringing these use cases in and changing the story from the institutions from using crypto to save money, right? Which is how it's normally done, right? It's usually said as blockchain can save you money on things like fund admin costs or managing your business, right? We can help them understand how to think about crypto the way we see it, which is crypto is a network. It's a network of users, a network of dollars, a network of protocols, right? That really can come together to build new products and new services and make money as well, right? And so that to me is where things are going. And so right now the institutions are in the exploration phase, right? They've kind of changed their perspective from, private chains, right? Permissioned chains that are closed to now public chains. We see Larry Fink and the BlackRock folks doing things on ETH mainnet, which is great, right? And we are seeing more and more deploy there. So we will begin to see a lot more come in, right? And then phase two, over time, we will begin to see them think about composability, think about growth, and think about building a network around these assets. And so, it's one of those things where the days are long, but the years will be short, right? We are in the initial deployment phase, but once we have a critical mass of users and a critical mass of assets from these institutions here, it will really explode and take off very quickly.
Plume has recently mentioned managing $1.25 billion in assets. Could you tell us more about the types of real assets Plume has tokenized so far?
Yes. So we recently announced our first wave of assets, which is a little bit, like you said, over $1 billion in assets coming to deploy on Plume. And like we said earlier, we have over 180 protocols building on Plume today, so a lot of different types of assets. So what is in there? We're an open permissionless chain, right? Most people think of RWAs as a permissioning. We are open permissionless. And because of that, we have a lot of protocols, right? And these protocols today are split between really three main categories. We have things like collectibles, so maybe sneakers or Pokemon cards, watches, wine, art, those types of things. Number two is we have things like alternative assets, so maybe private credit, real estate, those types of things, green energy, right? And then third is financial instruments, maybe things like equities or corporate bonds or those types of instruments, right? So we have all three of those types of products on chain, right? And things that we're tokenizing. Now, this 1.25, right? We really think of the areas that we care about is less about, it's less about asset class and it's more about use cases. Right? Again, if we are focused on making sure that crypto is useful and we build the RWAfi story, then we really want to make sure that we focus on use cases versus assets. People don't think about assets, they want to think about what to do with it, right? And so for us, we think about three things that really matter for crypto people that we're focused on. Number one is yield farming, right? Earning. Right? That's a very classic crypto use case. Number two is going to be trading, so spot stuff, right? Buy, trade, lend, borrow. And then third is speculation. So we focus on those three markets to really build this RWAfi ecosystem. And these initial release for $1.25 billion worth of assets is really focused on the earning category. These assets are very safe, stable, right? And the properties that we like for the yield farming is things that again, we focus on liquid, we focus on composable, we focus on permissionless, right? That's the first thing. Number two, what we focus on is high yield and very safe and stable yields, right? If you want to yield farm, it has to be that, right? And so, for example, we have products that, range anywhere from, corporate bonds that can yield somewhere between 10-15%, maybe 8-10% APY paid out on a regular basis. We have things like solar farms, right, that are already live. They exist. They already sit there. They have a huge contract, 40-year contract with a government or school or hospital, and they gets paid on a regular basis. That's a 10 to 12, 15% APY. We have things like oil wells, right, that are sitting there that just print cash because it's an oil well that just mines and has money come up. And so that's another one that prints anywhere between 10 to 20% APY, right? And so these assets are things that, again, they're very safe and stable. If you look at things like, they're very energy related or they're very AAA sort of like investment grade vehicles where the risk of it going bad is very fast. So we think that the first types of assets we want to focus on really have this component of, showing the use case and showing real yields on chain for users without taking in a ton of different risk. Of course, we can get higher yields as well, and we will introduce those products. But, we think to evolve the story around RWAs and to let people, to follow where people are going today, we started off with stablecoins with zero yield. Right. And now we've moved into where we have a 5% treasury yield, right? That's really common across crypto today, right? People are buying treasuries, people are buying stable coins, all these kinds of things to then pass this 5% yield to the users, right? And as rate cuts come in and those yields go down, people will search for other areas. And so we have access to a lot of proprietary assets that can give you higher than treasury yields, right? More than 5. I think they're talking about 10, 15, 20%, right? All these types of yields, but also still very safe and stable, right? And so it should be a no-brainer if you have idle assets or idle capital to allocate to these areas to earn real yields while you continue to utilize crypto and do DeFi things at whatever you want to do across crypto.
As you are adjusting their usefulness, Plume has been making waves with its tokenization of real-world assets. Could you share some success stories or case studies where investors or businesses have greatly benefited from using your platform for asset tokenization?
Totally. Yeah, 100%. I mean, we have, again, we work with many, many different types of protocols. And because Plume is built for RWAs and RWAfi, we can customize the chain and the tooling around the chain to make it the easiest place to do two things. One, bring and tokenize assets on chain, both physical or synthetic, right? And number two is then make sure it's the best place to make these assets useful, right? Which is why we have this user base and why we have this ecosystem of projects. So it's actually something you can do when you're there. But to talk about a couple like of the individual stories around this, I would say there's two sides of it, right? Both is the asset side and also the project side, right? And I would say maybe starting off, because we are focused on RWAs again, we can go much deeper than most. And so we've taken a specific, we've built a product called Plume Arc that allows us to really go much further than most protocols, right? Most projects in RWAs, the first question is not what chain can I go to? The first question is, how do I get this asset on chain? right? And most general chains and most ecosystems don't have the tooling to do this. So we've built this and we've integrated into the chain. So it's a very consistent and seamless experience. And so when we go to folks, I can give you an example. For example, Mineral Vault. Mineral Vault is one of our protocols, right? And they were not on chain before, right? They had talked to a bunch of folks like Securitize or different protocols out there that can help these things. And it turns out, what they really needed was a full stack way to distribute and grow the product, which is they need somewhere to tokenize the asset. They need somewhere to then do initial distribution and liquidity, right? They need to find different protocols and then distribute it. They need a community to distribute those to. Then ultimately a group of assets and an ecosystem of projects to then make it useful across, right? And so all these things come together to make it very useful for them. So, compared to them, when they came to us to tokenize instead, right? We've planned to do, the first tranche is probably $100 million, but they have over $1 billion in assets that we are going to tokenize as well, right? Like if we look at that, they're going to someone else would have cost them far more money to tokenize because we do it and we care more about the ecosystem rather than charging money for tokenization. We can do it far cheaper and much faster, right? It's gone from several months down to just a few weeks with us. That's the first piece. Number two is then actually after that, the actual act of finding the protocols, deploying on chain and distributing to users can be done much, much faster, right? We've heard many protocols take a lot of time, anywhere between, 3, 6 months, 9 months, 12, 24 months to get their assets on chain, and they can do it with a couple weeks with us, right? So that's kind of one of the examples. I would say another example more on the protocol side is a solar project. Right, they have a bunch of green energy, a bunch of solar fields, right, and they tried to launch on a different ecosystem before, right, with full team support, right, because everybody wants to kind of pretend they have an RWA story. So they went out to talk to the ecosystem, try to get on there. One, they found that actually tokenized bringing asset on was very hard and complicated. Number one. Number two is that once they launched, they realized there were no users. Right? They said they were disappointed to go out and realize after they launched with tweeting and hope and promotion from the CEO and everything, they ended up getting 0 new users and no dollars in. Right? And despite this being one of the big ecosystems today, with a bunch of liquidity, a bunch of transactions, a bunch of users, right? They got nothing, right? Versus when they came to us, right? Very simply, in 2 weeks, right? They got over 350,000 transactions in their protocol from our community, right? Over 100,000 net new users, unique users to their protocol, right? And also they found some money through our ecosystem as well. So they're able to capitalize and actually transact and build that. So, that's the difference between us and many others because we are focused on RWAs and RWA5. We have built a community that is matched up between the protocols, the users, and the liquidity that's focused on this type of asset to really make it a useful thing. So that's how we can outcompete others, and that's why so many projects, may try to go somewhere else, but they ultimately need to come to Plume for this, and that's how we've been able to grow our ecosystem to, over 180 protocols today and all these different users because, we're really able to aggregate all of this in one place and focus it on a single use case and a single story around RWAfi.
So how does Plume determine which real-world assets are suitable for tokenization?
Totally. I mean, it's two things, right? Number one is, I think, look, at the end of the day, we are an open and permissionless chain. So we don't choose, and anyone can build anything on Plume, right? So we don't stop people, and we want this to be an open environment and an open platform where anyone can build anything. Right, because because aligned to crypto principles, we want this to be an open platform where you can innovate and create new things and really push the ball forward without it being restricted from people, anyone else. That's the first step. Now, secondly, where do we place our go-to-market efforts, though, and where do we spend more time and more effort trying to bring things on chain? It goes back to those use cases that I mentioned, right? We don't think about assets, I think about use cases, right? And that goes back to those three. I think it's about earning, right? Yield farming. I think about trading, and I think about things that are speculative. And what are the types of assets that fit within those categories in which the audience that we know today, our community, is going to like, right? And so if you think about the first category, which I mentioned a little bit earlier, this yield farming category, what are things people like today? They like safe, right? They like stable real yields, right? They want liquid, they want composable, it has to handle and have size, right? And so that's why you see the composition of assets that we're bringing on have those types of types of dimensions, right? Where, again, a solar farm, very simple. These things don't default. It's already built, so there's no construction risk. There's no operating risk because it's very easy, right? And all you're doing at that point is really just collecting an electricity bill, right? So that type of asset is one that we like, right? And something that makes sense. If you look at things like, again, the mineral vaults, which is the oil wells, right? Again, same thing, right? When there's a tapped oil well, it's going to just print cash, right? Because it just brings up money. Now, the difference is the price of oil changes, goes up and down, but it's a very stable, safe way to earn cash, right? And so those are the types of things that we like. On the other side, the types of assets we like are things that already have a secondary market because we're really focused on growing users, right? And building real ego. So it's real yields and real users. And so for trading and speculating, we like things that already have a secondary market in which the logistics of trading can be solved with the blockchain, right? So for example, take sneakers or Pokemon cards or sports cards, right? These markets are already billion-dollar markets today, right? That exist in the real world where people are buying and trading sneakers. 80% of sneakers are bought to be resold, right? Because it is a very speculative market, right? And limited by supply, and there's very similar to the NFT market as an example, right? And so those types of assets have a very challenging time, right, today, because turning those is slow, right? If you buy a bunch of sneakers to speculate on, you have to then wait for a long time for it to get to your place. You have to hold it there, wait for it, and then you send out. It's a very slow turning process. Same with cards, right? So instead of doing that, if you can have the asset in a single place, you can sweep the floor, right? Hold the asset, wait, and then flip it later, right? Or you can take out a loan against it while you're waiting for it to go up in price, right? That's it. Or you can just speculate on the price itself and do a synthetic of the asset, right? And then speculate on that way. That to me speeds up the turn. It brings new liquidity in, right? And also for the people that are housing these, right? For one of our protocols, they're partnered with one of the largest secondary sneaker stores out there, right? And so this way, every single user that goes to that store gets onboarded into this protocol, right? By default. And so we are constantly on one end bringing real yields in through these yield-bearing products in the earn section I was talking about, and in trading, we're bringing real users in from all kinds of markets and ecosystems today that are growing the pie for crypto, which really for us is the important part. Is we want to grow the crypto ecosystem and we want to grow the RWA story and RWAfi use case. And so both of those are how we think about where we position ourselves today. But again, Plume is open, and we have everything on chain today, and we encourage everyone to bring everything on chain because who knows where the innovation will come from and where these great use cases come from, and so we want to create a platform that makes it easy for anyone to come here.
What innovations has Plume introduced to enhance or guarantee investment returns on tokenized RWA assets?
Yep, totally. I mean, a couple things. For us, it's building this full stack ecosystem around choosing assets, around bringing them on chain, and structuring them in a way that makes it very easy to understand. Right? I think it's both asset selection, but also format of the asset. Right? Most projects today, when they are trying to figure out where to deploy, have already brought their asset on chain. Right? And because of that, right, they may have formatted it in the wrong way, which means by the time you brought it on chain, right, you've now made the asset where you have to KYC, it's permissioned asset, or it's illiquid, 3 to 5 year lockups, right? Or you picked a bad asset, right? And there's only maybe a 3 to 5% yield or something, right? And so for us, it's because we own the full stack end to end, right? We can help shape the products much further upstream. So when we first discover what type of asset, we meet an asset manager that wants to deploy on chain, we can help them format and shape this protocol, right? And shape the asset to make sure that when it comes onto Plume, it's usable, right? Meaning it's composable from day one, right? It's liquid, it's permissionless, right? And we've also formatted the application in a way that makes it useful. So sometimes you should do NFTs, sometimes you do tokens, right? Sometimes you figure out how to pool it with other tokens to reduce the risk and increase the yields, right? And so it's by building this protocol called Nest and Plume Arc and these different types of protocols, and we combine them, we make it very easy to bring anything on chain. Through that process, we can format it correctly, right? Through the innovation that we built at Plume Arc, and then through Nest, we can actually then distribute this product properly to everybody, right? To make sure that you can either do it individually, you can create an index and pool these things together, right? And when you do that, it increases the yield often, right? Reduces the risk, increases liquidity, right? And then also allows you to then create new baskets of these things as much as you want, right? So anyone can create any RWA pair, right? Any RWA asset and mix them however you want to create new pools and create new indices for these types of products. And when you do that, it does two things, right? It really increases the assets liquidity, increases the yield, right? It reduces the risk, and then of course, on top of these things, many of them are also further incentivized by the protocol itself as well as Plume. So in this way, by buying into some of these assets, you can do a very simple thing. You can also not only get 10, 12, 15, 20% APY in stables, right? Paid out on a very regular basis, right? This is not wait 2 years. You can get it on a very regular basis, often real time. You can earn the native protocol token, right? And so perhaps we can call one called Nest or something. You can begin to earn 10, 15% in Nest token, and then earn another 10, 15% in Plume tokens, right? So you can really get to 10, go from 10, 20% to 30, 40, 50% APYs, right? Where a huge chunk of that is in stables, right? And the rest in tokens. So compared to the APY waterfall that we've all seen a million times, where it's 1% stables and 9% tokens, now with Plume, you can get 20%, 15, 10% in stables, and then another 15, 20% in tokens, right? So you can really get both at the same time. And so that's the idea that we have. It's only by building all this infrastructure have we allowed this sort of pipeline to make it very easy to click a button and allocate to the real world, get yields, but click another button and take it out and do whatever you want, right? That's the infrastructure we've built. That's the innovation we've done to make this a very straightforward product. And then we've also built a bunch of tools and guardrails in place to make sure we're picking and selecting the right assets for these users.
So, what actions can users take on Plume's platform to engage with RWAfi? Are there specific features or tools that empower users to interact with these tokenized assets?
Yes. The way we think about RWAfi and the way we think about RWAs is normally, right? Again, if we go back to the number one RWA product, the stablecoin, the reason why the stablecoin is so successful is because you didn't have to learn anything, right? It was just like crypto, right? It was open, composable, it was liquid. I could buy and swap anytime into USDC or USDT, right? And there was deep liquidity everywhere, and it was fully composable with all these different ecosystems and all these different projects, right? And the way we have structured Plume and the different projects and assets on the Plume network, right, is to make sure that it's the exact same experience. You shouldn't have to know if this is an asset that is a crypto native asset or a real asset. It does not matter, right? You should be able to use it in the same fashion. And so the things you can do with it are very simple. You should be able to very simply, right, mint an asset, right, and buy something, just like you would mint an NFT or mint a token, right, in crypto, right? The difference is instead of a crypto native asset, you're minting a real world asset, right? Number two, you should be able to swap, right? And in a decentralized manner, trade in and out of this asset at any time. Right. Of course, then when you apply that on top, you should be able to then do the normal things, which is then you should be able to put this into a lending market as a simple example, take out a loan, right? And then you can either use that loan to do something else, or you can do classic DeFi stuff like looping, right, against these assets. And if you're looping on yield-bearing coins, you can really get from 10, 20% in stables, right, to 40, 50% in stables as well. So really you can get a lot of upside from this, right? And then of course, lastly is really to make sure that you can also use this to do further speculation. If you want to enter into a perp stacks and use it as collateral to then take out a position against, then you should be able to do that as well, right? So those are the types of actions and things you can do, right, with Plume and RWAfi. And it's been designed and structured to feel exactly like regular crypto. So you shouldn't have to know, you should know anything about it. You just need to question, where does the yield come from? Is it real? Do you like the asset? Is it stable? Right? Just like you would with any other crypto native project, right? And only by doing it this way can we really grow and bring RWAs in and change what it has been, right? From like today, RWAs have been always slow, low volume, low adoption because of all these user experience barriers and because it misses what is important to the crypto native audience. And by changing this, crypto people should have no education. They don't need to learn anything. The actions are the same. The use cases are the same. The difference is real yields, right? And the difference is the types of assets, but ultimately the experience should be entirely the same as anything else in crypto.
How does Plume navigate the complex regulatory landscape when it comes to tokenizing real-world assets?
It's a good question, right? I mean, I think a lot of people think about RWAs and think about regulation. It's a real thing, right?
Mm-hmm.
It's two things. Number one is our approach is a very modular approach, right? There are many different geographies, whether you're in Asia or in the Middle East or or in America, right, or wherever, every single one of those has a different regulatory structure, different regulatory regime, and how to do things. Number one is really making sure that we are built, again, in this modular fashion, so we can utilize the best of everything from local areas. So, for example, we have a partnership with a firm called Texture. It allows us to utilize our broker-dealer license. And so this way, if you wanted to trade regulated assets, you can. Right. There's one way. Now, it's a very expensive and hard process to go through. By doing things through partnerships, we get a huge leg up, and we can utilize. They get value, we get value, and the user ultimately gets value. Right. And so that's one example. Same thing with within Asia, within the Middle East, or wherever it might be. Right. We really do a lot of work partnering, and we do a lot of work making sure that we can easily plug things in and out and swap different licenses or different assets or different protocols to do this. And so on Plume, there's 2 degrees of everything. You can always do everything in Plume on a very regulated fashion if you wanted to, right? Again, we're an open, permissionless chain, but we're built in a modular fashion. So to make it the easiest place for anyone to use and to build on Plume. So if an asset issuer wants to build a permissioned protocol that only some can use and only can trade on regulated exchanges, right, or only can sell to certain types of people and restrict, you can. We have the whole tooling set, all the integration is done with everything, so you can make it very easy to do whatever you want there, right? But on the other side, we've also built the whole ecosystem to be very open and friendly and permissionless, so if you did want to do a different version of those things, you can, right? And so depending on the asset and depending on how you want to present the asset, right, we have either all the things that you need to stay in a very regulated environment through a bunch of partnerships, through a bunch of integrations, right, to make sure we are using the best of out there, or you can do things in a more open way, right, and in a more crypto native way, and stay away from those things as well. And the story of Plume is to balance both of those things in the same place, right? Many things don't need regulation, right? For example, cards or maybe sneakers or watches or what things don't need regulation, and we don't want to keep those out. Right, we should be able to use these things all in the same place and have a single network to create a density around the network for this type of asset and these types of uses. So we have both. That's our story, and we do this through modular partnerships. Many things we've built ourselves. We have a transfer agent license as well. But again, in order for us to go very quickly and to have broad coverage, we need to do this through partnerships and build an ecosystem around this versus trying to do all this ourselves.
So what security measures does Plume implement to ensure the safety and integrity of both the digital and physical aspects of the tokenized assets?
Yep, yeah, great question. I mean, I think it's 2 things. For the tokenized assets and digital assets, right? We really want to make sure. So just talking about 2 different use cases as an example, right? One use case is taking your tokenizing, like again, maybe it's sneakers, right, or cards, right, in which you are taking a physical asset and putting it somewhere, right, and then being able to mint a tokenized asset against it, right, and then have that on chain, right. So in this case, for the physical asset, we make sure, and again, we built this product in a modular sense, so we make sure that we that the asset issuers partnered up with very trustworthy and solid institutions. For example, we have a partnership with big warehouses and big like safe, secure areas where you can bring those assets, you can tokenize them, and make sure they're safe, right? And they're guarded and they're stored there. And then anytime something happens to the asset, whether the door is opened or someone unlocks something, it sends a notice on chain, so you know what's going on. Right, that's another one. So for another one would be, these yield-bearing assets. So take a solar farm, right? Another way to make sure that it's secure and also real, right? We can integrate directly with the solar farm, right? So you can not only do what you get in the real world, but actually do better, right? Because if we integrate with the solar farm, I can tap into the device and show the user how much electricity is being captured by how much sunlight's coming in, how many UV rays, how is that being converted to electricity, and then map that to the contract, and then you can show how much your money you're earning and your yield mapped directly to the input into this, right? So that's the idea, to provide transparency and make sure that these areas are in safe places. This is, if you have a bunch of sneakers in your house, right, and you want to mint NFTs, right, that's not going to be nearly as credible, right, as being able to go into a Brinks warehouse, a very safe, secure, recognized brand in warehousing and storage, store your asset there, and make sure that people have a clean visibility into proof of reserve, right, and proof of the asset. That's number one. Number 2, for the digital representation, right, in the digital assets, right, we partner with the best out there to make sure that it's safe, right? We partner with, big custodians, right, both like, for example, the Anchorage of the world, Fireblocks or BitGos or things like that, but also partnering with, others in different regions as well, right? So this way you can make sure that those tokens, those assets, the digital assets, are being stored in very safe, right, and trustworthy places as well.
So thank you for joining us today.
Perfect. Thanks for having me, and appreciate it.
Okay, thank you.
Thank you.